I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. The beneficial ownership information reporting, very important to understand because it is a reporting that's mandated beginning January 1st, 2024. If you are a new business that started after 2024, you must complete this beneficial ownership information report. If you had a business before 2024, then you are going to be required before January 1st, 2025 to submit this report. If you do not, it's a penalty of $500 per day. And it could be up to $10,000 and criminal charges. This is very important to complete. I think on the criminal charges is how you report their information. So if you report information that is not correct. The purpose of this reporting is the government wants to make sure that financial information that is provided through the banks, through the IRS, setting up tax returns and deductions, there's no fraud. So this is called the FinCEN area of the IRS, where they're looking at financial transactions and they want to make sure they understand who owns these businesses. So it's called a beneficial ownership information report. If you go to my resources page and try CorpNet, CorpNet is the company that I partner with to do compliance of these types of reportings. Also compliance, when we talked about you have an LLC, you may have a C Corp or S Corp, you need to have corporate minutes. You need to make sure that you're complying with having minutes, board meetings, and they help you with making sure you're in compliance with filing and keeping record of all of these mandated compliance and business formations. You can also go to CorpNet to just to try CorpNet and find out other information about what type of formation, like we talked about the type of formations you need to form. You can form your business on CorpNet. I would not recommend CorpNet if you have a complex like 4, 5 or more, maybe 3 or more partners that are involved in your business, because with that, I would definitely go with an attorney that has clear understanding of your business, someone that understands that industry and understands what you are doing when you're setting up that business with a partner. Also, if you want to sell your business, you may want to do certain type of small business stock if you're a C Corp. So that's important too, to understand small business stock issuing is a great way to start a business because it allows certain tax treatment, great tax treatment. So small business stock. So in those situations, I would recommend really working with an attorney that understands those specific guidelines. But the beneficial ownership information reporting is huge right now. To me, I don't feel like they have reported it enough. It hasn't been something that has been clear to everyone, and individuals and business owners are really going to suffer, mostly the smaller business owners, because it's for individuals that have less than or 20 or less employees. So it's really impacting the smaller businesses. You're going to have to find someone to do the reporting. So that's financial implications on you. A lot of people have not heard about it, so you can have a penalty. What's important too is the information that you have to give. It's very invasive to me. You have to upload your driver's license or passport. You have to have your address, and it has to be your address. It cannot be your attorney's address or PO box. You have to have your birthday. Anytime anything changes, you have to update the information. So let's say your address changes. Now you have more compliance. You have to update to the FinCEN that now your address has changed. So your name changes. Let's say you get married and your name changes. You have to update this information to the FinCEN. And you have to do it for every entity. So let's say you have 20 entities. You have to do this reporting for all 20 entities. Like on our real estate, we have 12 properties. If we have 12 different real estate LLCs for each property, we would have to report that for each individual property. So to me, the compliance is too much. Also, the disclosure is invasive, but that's what the FinCEN is saying. They need to know who owns these entities. They want to understand who's the beneficial owner. And so not only the owner, it's also anyone that could have responsibilities for overseeing. So if you have a person that's not the owner, but may be the CEO of your company, and they have power over the entity, they may have to also provide all of their information. You are a CEO of a company, but you're not the owner. You may have to provide your information. That means that the owner of the business could have all of your information. So one of the areas that I'm most concerned with is that privacy and sharing the information with other people, uploading this information. How do we know that it's secure? If you are in a position where you're not the owner, but if you are at least 25% owner of a business, then you would qualify as well. So you don't have to be 100% owner, 25% owner. Or if you are a person who has substantial control of how the company operates, you may have to file this information. So it's a lot of information and guidelines that people are not aware of. And it started, the mandate started January 1st, 2024 for new businesses. I think you have 90 days. At first they said 30 days to file, but now they're saying 90 days. What's important is if you don't understand how your ownership works, because you may be a partner of another partnership. So it could flow down various levels. So it's important to really just understand. And that's where the compliance problem is going to come in, is knowing who is obligated to file based on ownership and based on, do you have responsibilities of, of the business and can control decisions of the business. So do you need to file? And then giving your information to other people. So there is a number that you can get. I think it's called a FinCEN number, where you apply yourself. That way, if you are a beneficial owner, you can just use your FinCEN number instead of having to put in all of your information for every entity. So like the example where I said 12 different LLCs for each property, well, you just have one FinCEN number and you submit all of your passport, birthday, address to get that one FinCEN number, and you use that FinCEN number and your name for each entity. So you don't have to upload that information. And that means if your address changes, your name changes, anything like that, then you only have to do it one time with that FinCEN number, because the FinCEN number follows you everywhere. It's almost like your social security number. It's going to follow you everywhere. So you do that one time. That means any new entities, you just put the FinCEN number. Any old entities, if you have multiples, it's easier to do the FinCEN number, as well as if you're a 25% partner, or if you're not a partner, but you have substantial control and decision-making, you give that person your FinCEN number. That way they don't have all of your information. It's very important. The penalties are huge, and there's not much information out there right now. But if you go to CorpNet again, they are doing the reporting. It's who I partner with to do the FinCEN filing and this beneficial owner filing. If you have complex entities, I really say that you talk with your accountant, who should know how all of your businesses are structured and who the ownership members are, because that's where it can get very tricky on if you're required to file. If you are a sole proprietor and you have not filed an LLC or any type of entity structure and you're just doing business, DBA, it does not apply to you. It does not apply to a sole proprietor. It will not apply to a general partnership. So if you and somebody else that said, oh, we're going to file a partnership, and you never filed any paperwork with any entity level, like at the state, then it will not apply to you as well. Also, there's some exemptions of who it would apply to, like a CPA firm, it doesn't apply. Certain insurance companies, brokerage, it does not apply. And the reason is, like for a CPA, I have to get fingerprinted anyway. I have to file certain things every year, and they already know. Insurance brokers, the same. They have to get fingerprinted. They have to provide all of their life and their information. And so we are exempt. Some of us are exempt, and there's some other nonprofits are exempt. And so there is an exemption list as well for the reporting. So that's important. I appreciate you all, and we will just continue to get your feedback. If you have any topics that you'd like us to discuss, just send us an email at hello@cmcraft.com, and we will try to discuss those either through our social media or through future master classes. I can be reached at CatrinaMCraft on socials. So Instagram, Facebook, LinkedIn is Katrina M. Craft, and a YouTube channel. So Katrina M. Craft on all socials. Thank you very much. Have a wonderful day, and hope your tax season and your tax refund is great. Bye.